How did USAA, the diversified Fortune 500 company, which primarily services military personnel and their family, sell out to Wall Street twice within the past year? And do you see another crash coming?
Well, USAA did sell to Wall Street in two ways, really, in the past 18 months. And yes, I do see another crash coming. We don't know when it will come, but it will come. But USA essentially sold out to Wall Street in two ways: by selling out their asset management wealth division to Charles Schwab, and secondly, they sold their mutual fund and ETF business to Victory Capital. And so that was essentially two strikes against the USAA people.
What is so bad about USAA selling its wealth management business to Charles Schwab and its mutual funds, ETF business, and college saving business to Victory Capital?
Well, essentially, if you really want to look at it, look what's behind the curtain is both Charles Schwab and Victory Capital have not been great risk managers, have been poor stewards of other people's money. And they really just haven't been the best, looking at people's money, and essentially gone from a mutual ownership to a stock-owned, controlled business by Wall Street.
In short, both Charles Schwab and Victory Capital have been controlled by New York private equity firm been poor risk managers.
Yes, they've been poor risk managers, and what do I mean by that? Well, first of all, let's look back and say around 2006, 2007. Charles Schwab had a mutual fund which was pitched to investors as being better than a money market fund. It was called the Yield Plus, and it actually grew to $14 billion in assets. Well, then the financial crisis came and the whole thing imploded. And essentially that $14 billion fund went into, I think it maybe ended up with like $500 million in assets. And the people who stuck with the fund lost 30% of their investment with the Yield Plus fund. Charles Schwab ended up paying, actually the company did, not Charles Schwab personally, the corporation paid $110 million in fees to the SEC. People don't believe me, Google it, and there was no accountability whatsoever. And so this is just one of the bad things about them going to Schwab. This could happen again.
This is a strong statement. Do you mean that Charles Schwab, who is a big Wall Street firm, does not always look out for its customers' interests?
Well, yeah, you have to look behind the curtain. Who owns Charles Schwab? Who owns Charles Schwab? It's really not Charles Schwab, although he is one of the biggest stock shareholders of the company. He's worth about $8.2 billion or so. The big owners of Charles Schwab are actually other mutual funds, companies like Vanguard, T. Rowe Price, BlackRock, and so forth, and they're really accountable to no one. So again, there's really been no corporate stewardship, and so this is one of the major problems today. There's no accountability.
What was so bad about USAA selling its mutual fund business to Victory Capital?
Well, Victory Capital is, again, this is one of the things that was going on which no one's really talked about since the financial crisis. Victory Capital was owned by a private equity firm, essentially called Crestview Partners. It was a management leverage buyout in 2013. And the bad part about private equity firms, and lots of people don't know, is that in my research has shown that over 310 companies in the U.S. and abroad have gone bankrupt during the past 20 years under private equity stewardship. So this is one of the things which these companies, they either go into default or they go into bankruptcy and all kinds of other shenanigans, and most people don't know about it. And this is my point is that Victory Capital, who is the steward of, is stewarded by Crestview out of New York, is got involved in some of these shenanigans.
What is so bad about this private equity transaction by Crestview, and are there risks we should know?
Well, yeah, the risk is bankruptcy, and people don't know that. But the examples, I guess, maybe people would better know of leveraged buyouts which have gone bankrupt are things like Chrysler Motors, Toys R Us, iHeartRadio, the Tribune Media Company, SunGard Data goes on and on, MGM Movie Studios. So a lot of these companies, they have so much debt. It's like trying to carry a fat man up Mount Everest because there's so much debt. And this is what has happened.
And why have these companies gone bankrupt?
Essentially, it's too much debt. I mean, it's just this is the major problem in the U.S. today, and in corporate America, the corporate debt is probably going to be a sign of where the next bubble is coming from. So it's probably going to originate in corporate debt, and some of the greatest abuses are in private equity.
These are strong words. Has Crestview Partners, which essentially created Victory Capital with debt, have they bankrupted any companies?
Well, yeah, they have. There's two big ones that I can think of offhand, and there's some other things. One is Samson Energy, which was a huge oil company, and they partnered with KKR, Kohlberg, Krivers, and Robertson. It was a Tulsa, Oklahoma oil company, oil and gas exploration, and it was a leveraged buyout for $7.2 billion, and they believe they went bankrupt in 2015. With $4.2 billion in debt. Essentially, all the money which KKR and Crestview had was wiped out. And then the other one, in the radio business, which we're both kind of passionate about, is that they owned the Cumulus Media, which is actually the second largest media company after iHeartRadio. And they went bankrupt. It was kind of a lot of shenanigans, Bain Capital and a whole bunch of other private equity firms involved in it. But Crestview put about $4.2 billion into it, or no, they invested about $500 million, and they ended up going bankrupt in 2017 with about $4.2 billion in debt. So these are the whole things. So the reason why we're reaching out is that some people who so USA essentially has sold it to Wall Street. This is all fact. And people don't believe me, I'd be happy to give them the resources for this stuff, which I think we'll put at the end of this video. And our important thing is that if people are really looking for a second opinion on this, they should know what's behind Charles Schwab. They should know what's behind Victory Capital, because this is because really protecting people's money should be the most important thing about financial planning. Preservation of principle is more important than, as Will Rogers said one day, I'm more concerned about the return of my money than the return on my money.
What should people do?
They should look into the small independent advisors, because big business is not going to look out for people. The amazing thing is the Gallup poll just did a research poll recently. Is they found that USA, who represents the military, people trust the military, and they the most in this country, and they also trust small businesses. But companies like Charles Schwab or big businesses were down about the 23% acceptance level. So people in this country really like small businesses, and they really like the military, and we kind of serve a lot of the people who have been in the military. So we hope this video will benefit them. Well, they can contact us by going to barrymdike.com or camnh.com, or they can Google me. I'm available in most search engines, and I pop up a lot.